Ed, walk us through the numbers. Which one of these should we be focusing on?
It's really hard to say. I mean, the stock bounced around in after hours and pre-market. We're up 3% now, highest level since April. So, you know, I think that overall the street takes a positive view on the idea that Rivian is operating in a really difficult environment. You know, this was the first meaningful quarter of revenue for this company, which did beat on the top line, as you said. But I think the thing is that they're very transparent about the reality. Materials inflation, raw materials inflation, freight costs are still very high, and they're going to have a much bigger than expected loss this year and defer capex. I think the capex part kind of goes a little bit understated, but they're basically saying, you know, we need to pull back or tighten our belts a little. And as you guys know, they're also in the process of doing layoffs. So I think the street we're happy with the transparency, and also they reaffirmed guidance for 25,000 vehicles to be delivered this year.
What is the level of confidence, though, among analysts that they can actually deliver their production targets? Because the supply constraints within the EV market, it doesn't feel like that's going to solve itself anytime soon.
Yeah, I think Rivian's issue, I mean, you guys know I find Rivian to be a fascinating case study. It has a lot of cash on its balance sheet, $15.5 billion, but it's a relative minnow, right? And when you're negotiating with suppliers, you basically have to demonstrate to them that they can send you chips in particular, and that they'll actually get used. I think the frustration, I know the frustration that RJ Scaringe, the CEO, is having, is that he's trying to get these suppliers to understand that the factory is ready to go, because of course the suppliers are also supplying other automakers, and they're allocating to them as well. Yep. I think volatility is expected here for Rivian, but ultimately they still see them as a genuine candidate to be a main player in the EV market.
Ed, if production issues can be sorted out, what happens to cash burn? Does it go up or does it go down?
Yeah, so I mean, a big factor in the larger than expected loss for the year, $5.5 billion of negative EBITDA, is because of the production ramp, right? You have to add a new shift. They're talking about potentially having a second shift at the end of the third quarter. Well, you've got to hire all those people. You've got to invest in the time, and also the basically operational expenses of getting additional materials into the factory for the plant. So the ramp will impact cash burn. And that's why they're tightening their belts in other areas, right? Laying off roles that are in duplicate, back office, marketing, things like that.
Yeah.